This is my weekend review video for Sunday, April 23rd, 2017. Heck of a good amount of stuff I'm going to try and cover. I'll start out with a couple of the overall macro situation, then we'll get into the, I guess now 10 market keys. It was 7, it's now up to 10. We'll discuss the major market indices, and then we will get into some of the momentum names that we've all come to know and love. Anyhow, there's been a little bit of pressure on the markets of late, and I wanted to discuss what some of those pressures might be. Anyhow, you had money being raised to pay the tax man up until the 18th, so last week. You had some new geopolitical risks, President Trump's actions in Syria, and some of the escalating tensions in North Korea. I think this just led to some profit taking and some people playing wait and see for earnings. We had also gotten through a holiday shortened week, and there was some angst about the upcoming French elections. So we're through the thick of most of that, and the market seems to be responding decently with a Sunday gap up in futures. But as I can't even believe I'm quoting this movie because it was so terrible. Big fan of the Rocky series, but Rocky 5 didn't quite hit the mark. But hey, yo, Tommy, I ain't heard no bell. So the bell hasn't fully rung to open or to close Monday's trade. So let's just not assume that the gap up or what have you is going to necessarily 100% hold. Although I'll talk about some of my opinions about that when we get to the ES and S&P analysis. Anyhow, that was the macro. Let's talk about the I guess the micro. Let's get into the VIX. Although this is my macro portion, kind of the indices and so on and so forth. VIX, you can see, didn't even quite get the downtrend touch. It was really just a backside of an old uptrend. You see, look above and fail here. Again, a look above and fail here. I don't know if that VIX is really going to be in danger of full-on collapse back to range low until it gets back below the 200 MA. You know, the 200 MA has gotten so low at this point. I'm not necessarily sure it's going to be as big of a deal as it maybe once was, but VIX has all the major averages except the 10-day here right below. So, excuse me. I think what happens is this just tends to vacillate in range, and volatility is still being compressed. Until this trend line breaks, there's really not going to be much of an expansion of range to talk about. So we need to kind of see that break before we can get really too bearish. I've also, I think, been pretty clear saying that the tempo and the tone of the market, even on the pullbacks, has been very lackluster. It just seems to me that it's a matter of inventory getting itself overly long or overly short, and then the algorithms punish those people, sort of like the late to the party people, like a big game of musical chairs lately with algorithmic sword bearers. Anyhow, that was the VIX. As far as the dollar goes, this is the Dixie. This is really in relation a lot to the euro. We know that the euro is getting a big move up because of after post-French election. So this dollar Dixie should be coming down. Take a look where this low here was. It's roughly around where the trend line is, and you have a 200 MA getting close to that area. You can see the 200 MA was a decent amount of resistance. Moves above it were hard to sustain until we finally had the big breakout here. You kind of had this flash bang move lower to retest the 200, and then we just kind of took off. So I'm either waiting for this kind of trend to break. You can see, I didn't really draw that in all that well, but hopefully 2 times and not 3 times are a charm. All right, so let's make that red. Fire engine red. Hot rod red, if we're going to be Iron Man-like. It hasn't really broken range at the look below and fail, a retest of the downtrend line, still making lower highs, and this was a lower low. So we have to kind of see how this is going to shake out. I'm guessing there's going to be some kind of a trend touch, and I don't necessarily know if we're going to have the break of the trend just yet, but I do think that this will be a very key level for the dollar if there is to be weakness. I don't think I would get really too bullish as far as the dollar until I start seeing it start to make higher lows. Like you can see here are higher lows, and if we were to take out this high with a trend snap, then I think the dollar to me would start getting pretty bullish. But until then, it just seems to be making lower highs and lower lows. It would help if I knew how to type in symbols. This is the ETF, the UUP. You can see here we've spent a lot of time on the breakout. A couple of days below, but the price wasn't comfortable there. We got to see the 2568 break convincingly, and you got a 200 right below there for this to kind of really start sinking. So let's just keep that in mind. It's kind of looking good for that kind of a move, but not necessarily there just yet. With regard to when you talk about the dollar, it's kind of hard not to talk about the metals. I've been getting a lot of requests to talk more about the metals, so I will do so. I believe there's going to be right now about a 20 handle gap down in gold. You had a double top here. This could be the retest of the breakout. So around the 200 MA trend line breakout area, like 120s, are going to be key. If it could hold 120, I think the move will be higher. If it loses 120, then we've got to redraw. Let's do it now. I'm a little bummed I haven't redrawn this in a while. 123.07. Let's just get that bad boy done. If you don't hold there, then I think we would at the very least see the 50 MA and potentially, and I guess I could get rid of this where we were bouncing too, although you can see we stalled just around the 61.8. If we are to pull back to a 61.8, then you're talking about 113s. So we'll see. I don't necessarily know if that is to be the case with regard to gold, but I do think that this area here, first and foremost, this 120.40 was the breakout. Basically, the 200 is right around 119.89. So 200 MA to me is key on this pullback. It's kind of a show me now for the bulls. If they lose that, I think that this could fill up the range down to at least the 116s, maybe the 115s, where that would 50% fib would be. So this is going to be a key level here for gold to hold. Silver. All right, so my view on silver is really simple. We need to get back up over the 200 for a move higher. If we lose the 50, I think we see the 100. I'm bullish silver kind of no matter what, and I'm looking to kind of buy more via short out of the money puts if we do get another 100 MA test. You can see the 100 MA here is where it really broke down from. Then we gapped up and held above there. We've spent a little time below there, but it hasn't been comfortable. 100 MA, and that would also coincide with the backside of the previous downtrend line, which kind of becomes, I guess, an unofficial regression line that seems to work well for me. So if, like I said, above the 200, I want to be long, or down by the 100 MA. Let's get back into the these TLT type of stuff here. TLT broke out of the range. The retest here was to the penny, the bounce, and we're kind of just holding above there. TLT is, I looked at the ZBs. It looks like it's going to have a bit of a gap down. The trend is here right below. If it gaps below there, I guess the 20, I really think this 50, 100 MA area would be, it's basically, look at this move here. You move from the range low to basically above the range high. Like a half back would make a lot of sense to me if it were to come down like 119, 120. I think that 119.21 was kind of the Fed day high breakout. So I think that area is going to be key, and I think it probably will hold if there is a pullback. Let me draw the fib on it. 50% fib is basically to the 50 MA. Let's get that 38.2 mofo out of there. We don't use 38.2s on pullbacks. We only use them on bounces. Yeah, the 50% fib. I mean, the 61.8, look, is down near the 119s. So remember what I said, 119s and 120s? I think that's sort of like your max downside reference for now. But like I said, trend is your friend. This is the key level. Anything below 122.86 to me would get more bearish. If it can hold there, I think it's still okay for that move up to 127s. I do at some point think this 200 MA gets a Testaruski in there. I just don't know the order of operations, if that makes sense. I know a lot of people have been making a big deal and asking about this HYG. Is it like breaking down? Like, is it what's this thing doing? I'll tell you, until this loses the 200 MA and it has had 2 look belows and fails, there's really no bear scenario. If you're looking for a right or right out trade, though, below 87.16, which is this range low, I think is a short to the 200 MA. If you get above this like 87.71, I think it would retest the old highs up in the 88s, if that kind of rings your bell for you. The crude oil. So this was the cause of a lot of the woes of last week. We got up here. I thought this was holding really well, and I had said I was surprised we didn't see 51s quicker, but it got it quick. And then we had a classic look below and fail, and now gold. Oil is above this 49.61. This is a very key area, with the 200 MA being the kind of the, I don't know, judge and jury. Moves below it here and here have been unsustainable. Same business here. So anything below the 200 starts getting a little suspect to me. I will say this, though. I'm, at this point now, more inclined to be looking to buy the dip in crude. And I'll show you why. But I will say this. What is the distinction of my view on crude? So let me clarify. Let me clear my throat, so to speak. If we hold 49.61 here, I think the path of least resistance for oil would still remain higher. If we lose this area and we get a retest of the lows and trend where I would be looking to kind of buy the dip, I think the bounce then becomes shortable. I don't know where it will be. It'll be maybe even midway up in here, maybe the 50 MA. But I'd be more inclined for this thing to make all-time high, or I shouldn't say all-time highs, but to come back up to the highs. Sorry, I had misspoke. Come back up to the highs if we can hold 49s. If we lose 49s and come back down, I'm going to think oil is less healthy. Still thinking it would bounce, but thinking the bounce would then be more of a short. So here I'm thinking right or right out long, looking for a move back to the highs. If we lose here, I would be looking to buy the dip here, but looking to kind of put it back out for a short higher. So that is an important distinction in my view. The big Mac Daddy of them all, this Exxon, and I want to show you, oh boy, cancel. I want to show you something that I noticed. I don't know if this is going to play out this way, but look at this big decline here. It was $15.89. If you took from here and you projected that lower, it's basically a move to the 61.8. And remember, I've been saying in the last couple of weeks' videos, 77s are sort of, with maybe a move to 76 on an overshoot, is kind of like my max downside target. This is starting to look like it might want to do the last leg lower, maybe on the earnings that's coming up this Friday. That's going to be a big deal because I would be looking to buy the dip on that, like a selling out of the money puts. Probably if it gets down there below 72 strikes and below. If this can get back up above the 50 MA, like this has had a lot of weird price action. Like look at this, you had this big move up on a ton of volume. This was actually kind of a trend break at the time. And it kind of was looking like it wanted to go. Then you had this big down move, couple of hammers, move up and now back down. I mean, this has not been acting particularly well, and I unfortunately don't think we're going to get a lot of resolution until their earnings. So I'll say this, if it rallies into the earnings, it'll probably have a pullback on the earnings. If it dumps into the earnings, it'll probably be a buy either on any dip on the earnings or even like small position ahead and then add it to it a little bit on the dip. It is still in a pretty benign channel, and this is getting more toward the end of the down move, I think. at least short term, than it is kind of to the beginning. Like, I don't think we're seeing 66s again, although I will say I have been seeing some longer dated put activity down in those strikes, so who knows? But things move in stages. I don't want to get too bearish on this until this thing at least loses 80. But even if it loses 80, I think the limit, the move down is to like 76s, 77s, and that's where I'm going to be looking to kind of like circle the wagons, for lack of a better term, and sell some out of the money puts to kind of boost that position back up. China. Now, I've been bullish on this Alibaba, but let's not get ahead of ourselves just yet. This weakness in China has probably been weighing on keeping that position from really going. I'm like a buyer of this bad boy in 36s, probably selling out of the money puts of 34 or 35 strike, but this just seems like it's in a big consolidation pattern, and I'll show you something that I actually am just starting to notice now. Here's a low. Here's a lower low. And maybe this is forming like kind of like, I don't know. This was like maybe like an inverse head and shoulders. It broke out and we haven't even retested fully. I mean, I guess this could be considered a retest, but these lows are key. The 200 MA is important. If this starts losing the 200 MA, I'd probably be a little bit more concerned with China, but I really don't think that this is going to be turned into too much of a disaster. So short term, I am looking to buy something into these 35s, 36s if there was to be continued weakness. BIDU. I'm still waiting. Look at this. We have this really weird compression of prices, and we're getting, unfortunately, the earnings isn't quite to the apex, which is really what I was hoping for. But I'll say this. Anything above like the 200 MA is looking a little better. Above the 50 MA is better still. But until this breaks the wedge, there's nothing to see. Like, it's just a boy. Hold on. Let me show you. Yeah, I mean, this is technically in a little bit of an upswing in terms of a bigger pattern, but I need to see this either break on the upside for a go with higher or a break on the low for a go with lower. I don't know if I have a bias on which way it's going to go. I guess I'm thinking it'll break up just because this is like such a big, long setup just for a disappointment move down. But I don't really play the game where I try to anticipate. I see it and then I go with it. So if we break the downtrend, I'll go with higher, or if we break the triangle lower, I'll have a go with for lower. I mean, it's really just that simple. The aforementioned Alibaba. So you have this range, and if you project a 1.618 Fibonacci extension on that bad boy, it takes you up to 124.62, which is basically a retest of the old highs. Let's zoom in. Okay. So we broke out. I'll just couch this with saying this stock doesn't love to behave well. It likes to behave poorly and make it very difficult. I've had some varying degrees of success with BABA, but on the whole, I've been, I guess, a winner. So once in a while, I play it. 20 MA has been key. That's roughly at the breakout. I don't want to get bearish on this until you lose 109.46. If you lose that, then it's toast. You're coming back down to 106s and maybe even 103s. But this should grind it out higher, preferably ahead of the earnings, and kind of have a bias of floating up. If it doesn't, like if it's not good on Monday, like if let's say this thing is lagging the market or even down, I will bail on it. I'll tell you this, I had a risk reversal call spread on, and then I saw this like topping tail and an equal high here, and I bailed on it once I saw this breaking. And then I kind of put it back on. So I have it on, but I'm tentative. I hate to say it. I'm a little tentative with this just because I know how this stock trades. It's like very herky-jerky. Look at this. I mean, it's It never makes it easy. It's long dated, so I have time, but I'm hoping against hope we get our resolution up ahead of that number or get the stop out ahead. But I'll keep you boys and girls up to date with what I'm thinking with that. If I make any changes on the position ahead of the print. So IBB, just playing ping pong here. You have a bit of a channel forming here now, and you're at the range low. If you lose that low of like 285s, I don't know if the 200 MA is really going to matter. Look, you've traded through this thing a hell of a lot of times. If you lose this, I think we're coming back down to like 271s and maybe even lower. But if you could get back up above the 50 MA, I think I'd be constructive for a move back up to the highs. So must hold this 100 and 200 MA confluence on any lower move. If it doesn't hold it, then we're going a lot lower, probably to fill up the triangle. If it can snap this kind of down trend with conviction, you can see it's like trying, and you have a 2-day range. How's this? Long above the 2-day range, short below the 2-day range. I'm going to keep it that simple. You know, I'm a simple man. I think simple thoughts. BIIB, this is sort of this is where the biotech problems started. This thing just was like an exhaustion gap. By the way, if anyone wants to know what an exhaustion gap is, what the end of a move looks like, this is about as classic textbook as it gets. You have a gap move up, extended move higher, and then like a gap that gets it all out, and then it's just sort of down. I think I said it at the time too. But we're not there anymore. We have been building what looks like a large base here for quite some time. I'm thinking this probably at some point wants to fill the gap up higher. So what I'll be looking for on their earnings, and they're coming up here on 4/25, so that's in 2 days, Tuesday, is to see if this can break the downtrend. If it can gap above the downtrend, I think it's going to be a gap and go. It would probably fill this 291 pretty quickly and maybe float its way up to like 309-ish, 310. If you lose this low, these lows, I don't know. I mean, this could see 246s. It may even see 223s again. This was a longer-term trend line. This is a shorter term, and it's kind of like just playing footsie. So for this to be bullish for me, I need to see it break the downtrend, and then I'd be a little more interested. We've been waiting very patiently for a pullback in GlaxoSmithKline. We finally have gotten it. The gap is filling. So here's the question. I've said I wanted to sell 40, 50% fib, or below strikes, like 39s out of the money puts. So why don't we just wait for it to get there? Well, I don't necessarily know that it is 100% getting there. We had a gap fill. That's an important level. The 100 MA has been important. Look where this broke down from. The 100 MA. This area is where I think it should stop on a pullback. Lower into earnings would be interesting to me, but I am beginning small to sell out of the money puts in GSK at 40 strikes and below. Transports. Remember when this was breaking out and I'm like, the market's not bullish, and everyone's like, oh, Justin, what are you talking about? The market's going lower. And we all know how that worked out. We have a range low. We've spent some time below it. We now have a higher low here, potentially coming into, and it would help if I could draw. Boy. All right, we'll just leave that alone for now. It's just giving me the business. The 200 MA, I was hoping for a 200 MA test. I don't know if we're going to get it. I'll say this. Below the 50 MA is a little vulnerable. If you could get back up above the 50, which is basically this range, this consolidation range high. The high of this day was 165.61. If you could clear that, I think the move will be up. If you lose this reference low here, this higher low, this 61s, 200 MA, and maybe even the the breakout, sorry, of 145. Look where all this consolidation was, the beginning of the move. That would be in play. So if you lose these, I would probably be looking to buy put ratios. So what would that mean? I'd be looking to buy 200 MA strike puts and sell 2 times out of the money down below for that type of a move. If it breaks above the 50 and 100 MA, which are both above us, which should technically be resistance, and it gets through and holds, then we are going back up. Dr. Copper. Remember, this was the other one that I said, this isn't exactly a bear move with copper rallying. Oh, Justin, it's not what it once was. It's not your father's Dr. Copper. Boy. 200 MA is roughly at the range low. Any pullback to there, roughly, I would be interested in buying the dip. I guess do it with either copper futures, or if you want to try Freeport, one of those type of names. While we're talking about, I guess I could do them now. No, let's do the major market indices first. I had a couple of other stocks I wanted to do. I'd love to say, can someone remind me to cover my kind of side notes here of some stocks like the banks and stuff, but I'm going to have to remind myself. Hopefully I'll remember. Anyway, I want to show you something that interested me, and I don't know if a lot of people picked up on this. Look where this low is, and look where this low is. Do you notice something? Anybody? Bueller? It's a higher low. Very important. We lost the 50 MA here, and we're now back through that price, basically, into the range. Remember, this was the look below and fail. This move should have been up, and that's where I got a little more cautious. This was a gap and move down. This was a look into the range lower. I mean, why didn't we lose this? This was very bearish here. When you lost this low, we should have been down kissing the 100 MA and the channel low very quickly. But we didn't. We had a rally, inside day, an attempted sell-off with still a higher low, a move up. This was a look above the 50 MA and fail, which should have resulted in disaster. But we just had an inside day Friday. Granted, we did close below the 20 MA on a closing basis. Monday is going to be key. Now, if anyone remembers my IWM analysis, just remember this when we talk IWM in a minute, because I mentioned it in my, I think it was in, I don't remember if it was in my last weekend review video or definitely on YouTube Live. Anyway, we are going to have a gap up, right, of about 20 handles or whatever it is now. I don't know where it'll be at the time, at the open. I mean, who knows? It could even be negative. We're going to open above this trend line. Is this going to be a gap and go? Is this going to just be a gap and chop or a gap and crap? That is going to be the key. So you can watch the opening 5 to 15 minute range, and I would either want to be long above or short below. And I'm going to keep it that simple. If we cannot close above the 50 MA on Monday and like we crap, I will be beginning bear operations. I will say that. If we can continue above the trend, and we should, I have gone on record saying I didn't think the French elections were going to be a big deal at all, and they have not turned out to be. I thought it was media-created hype. The same media who got you scared about the market on Brexit, which I called and said was going to be a buy. Everyone told me I was crazy. I'm on record saying Trump would be a buying opportunity. I said the market wanted Trump and to buy it. And everyone again said I was nuts. And then I told you now that I didn't think the French elections were going to be that big of a deal. If you look back at some of my tweets, I said I thought that this was being hyped. Anyway, it seems that that is the case. Now, the door test, kid. Anyone see Bronx Tail? 20 MA is an important one. This was support. It has now been resistance. The 50 MA was support and now a bit of resistance. We need to hold the 50 MA. Keep it simple, stupid. If we lose that again, I think we're absolutely, positively going to see that 100 MA. It's incredible to me that we did not. I was really hoping to see that, and usually when I hope for lower like that, we either don't get it or we get it, and it's so quick that there's very little opportunity to actually play it. the fact that we are never got the 100 MA test means that if you think about like your gaming days, we still have lives left in the game. Like, consider a 50 MA a bounce, using up a life, and then 100 MA and a bounce using up a life. We still have this life. We haven't lost it yet. So things are going better. And this break of this downtrend is going to be key. I think a hell of a lot of people are going to be caught with their what's down, and they're going to get spanked pretty good on Monday. We'll see. The expected move in SPY this week is $4.67, so up to 239s, which would basically be a break of this and filling up the triangle to 239s. Or the move was to 229s, so a snap here and a move basically to a little bit below, to channel low. See? That's what the market was factoring in. A move up to the old highs or a move down to the breakout here, a retest and the channel low, which I've been saying would be a absolute screaming buy, and unfortunately we are not going to have that opportunity. So anyway, I don't want to bewilder this any longer. Above 50 MA and above trend, good. Below, not good. Now, the aforementioned IWM. I've mentioned this. I believe I must have mentioned this on not Periscope. Talk about living in the past, right? YouTube. This was the day I broadcast. I did Thursday. And remember what I said? I said we were above the inverted hammer, and this was technically a break of the trend line. And then Friday was a hold of the 50 MA with an inside day. Now above the 2-day high is a long, probably to the backside of the old up channel and the old high. Whether that'll be a double top or not, I don't know, but that's really where we should, quote unquote, go now. I want to just mention something. Everyone who is a market hater was telling me and DMing me and messaging me about the IWM. Do you see the weakness in IWM? Do you see the weakness in IWM? And I kept on saying, it's holding the range. It's not that bad. I mean, you got to turn off the damn television. TV reporters aren't traders. And I said that on Thursday, do not ignore that IWM, which is the leader of these things, broke the channel. SPY and those should follow, right? Looks like that is prescient. So that's my analysis on IWM. The expected move is $3.07, so up to 140.28. Which is basically a retest of the highs, or down to 134.14, which is basically the range low, just above the range low. Also, if you recall, I said the Qs were doing well. Higher low, look, higher low. We didn't even break the 50 on the Qs. I don't think it even fully touched. And we're now back up. If the market holds, we're going to open up at an all-time high in the Qs. The bear market in the Qs rages on, right? The whole market is rolling over. Not the case. I've said I thought that the channel low and the 50 MA were the key. We haven't broken either. A lot of people like to anticipate. They like to be early on moves. I'm very rarely early on moves, although I will say this. I have had a pretty good track record of kind of nailing some tops, sometimes almost to the tick, eerily to the tick, as well as lows of nailing them kind of eerily to the tick. And they're usually when I've been stalking something for a long time, price of like a stock and a chart, and and it coincides with a lot of technical levels, like a trend line, a 200 MA, and a 61.8% Fibonacci level, or a key horizontal support level. But I'll say this is I didn't want to jump in front of the trade. I wanted to see the break first, break the 50 to see the 100. A lot of people got all shorted up saying, oh, we're getting close, it's going to go. It never went. And now they're going to have egg all over their face on Monday. $2.50 expected move up to 135.06 or down to 130.06. Let's get into some of the bad boys of the NASDAQ, right? Oh, yeah, to quote the Macho Man, Randy Savage. God, I miss that guy. He was so great. Anyway, look at this. This was the big emotion day. I love keying off big emotion days because there's a lot of emotion. There's a lot of people who have their hopes and dreams either made or dashed on those days. This held the breakout. You've spent 1, 2, 3, 4, 5, 6, 7 days inside of that range. So what do you think will happen when that range is violated? Meaning a move to the upside or a move to the downside? My answer to that would be a move to the upside would be a long, so above 143.35. All the people who shorted in here are going to have to cover, or a break of that low, which is 140.06, and basically will be a 50 MA. All the people who got long or bought in here are now wrong, and they're going to puke it up. Pleasant graphic, right? Look at this. We broke out of the consolidation channel. I still think, and maybe it happens on earnings, who knows, it is due for at least a touch. You know what I always say? The first touch is a buy for a bounce. The second one, if it doesn't hold, usually comes mid-channel, which look would be basically where the earnings gap starts. So I want to go with short below 140.06 or long above 143.35. Fingers are absolutely crossed for a shake and bake situation for their earnings report, meaning I was hoping for the breakdown to the channel and then set up for a right or right out long, but we'll see. We'll see. Microsoft, all-time high on Friday. And I've been saying this for weeks and weeks. As long as this holds the 50 MA, there is no short to be had in Microsoft. Any loss of the 50 MA, I'll be right in there shorting it with you. But we have not seen that. And we are at a new all-time high on Friday and looking like a new all-time coming on Monday. Bear market, huh? Amazon. All right, so Amazon is like the belle of the market right now. I think it's a little bit too loved, frankly. And I hate to admit it. I'm an Amazon fanboy. I don't like Jeff Bezos' politics, but I will say this. He is the greatest retailer of all time. He has created the best retail experience of all time. He has destroyed industries, century-old industries of retail, and it's really impressive. I believe Amazon will eventually go higher, but I can't tell you that it won't have some kind of a pullback on their earnings. Any pullbacks to the 50 MA and breakout area are buys until they are not. I think the worst case scenario, in my view, is a move down to channel low, which at the time will likely coincide with the 100 MA. So if there is a down move, I'd be looking to buy 50 MA out of the money puts and selling 2 times the 100 MA strike. And I'll keep it that simple. But the ideal scenario, of course, is lower into earnings and then a pop on it. If this continues to rally, it gets a little bit more risky, and I don't think we're unfortunately going to get any resolution until the earnings. The way that the market is viewing this stock, I think any down move will likely get bought. Listen, I don't discount this thing having a 200-point correction. It's done that. But the zeitgeist of Amazon at this point seems to be that the market wants to look through bad numbers. So I think that at this point, the prudent position for Amazon is to wait for the earnings and see how it goes. If there is a gap down, you want to see if the market looks through it or not. If it doesn't look through it, then I think we get a larger correction, and you could play a short play in that move. If there is a move up, I think this thing is just going to blow off and be one of those summer stocks that just, takes off. Facebook. This is grinding up to my target. I've been talking about 145s, 145.83. I'm sure we'll see that and more on the open. I will caution that we do have progression lines. For those of you who have followed me for a while, we have progression lines coming up. Anytime this stock has touched these numbers, it has been met with a fury of selling eventually. It sometimes takes a while. Like here, you round up, but eventually it succumbs. We're getting close to that. You have earnings coming up. It probably should be a pop, is my guess, but I don't love that it's run the range, it's getting my price targets. So any moves up, I'm probably looking to book some profits. I am a buy the dipper on this stock though, considering we are now from all-time highs. So any like gap down into like this range between 128s and 133s, you have the 100 and the 200 MA. Any move down into there, I am an out of the money put seller. Netflix. I will say this. I am impressed that Netflix is doing as well as it is here. You lost the 50 MA. We haven't gotten back over it. So anything below the 50, I will say, is still vulnerable. But look, you basically didn't even get a full move to the range low, which is 137.03. I have to tell you, when we lost this low, I thought the gap fill was a done deal. I wasn't short, but I was looking to actually get long, but it never did it, and it's bouncing back up. I will say this: if this is weak on Monday and you can't get above 143.46, you probably then can try a short. If it gets above, I wouldn't mess around with it. This stock tends to have big summer corrections, so I'm a little leery of that. Speaking of another one that reported this week that is getting the wackaroo, is IBM. This was sitting right on the trend line, and it was a gap down. You spent 3 days here. This could rally up to the 200 MA, but I think it would be a short at this point because, look, that's really the range low, and this was the breakout of 164.95. The ideal scenario in terms of this would be to lose the earnings day. Like, look, you've put in a lot of inside days. Once you lose 159.60, it should be a short down to 154.81, which is the gap fill, and maybe a completion of the triangle down to 147, which is really the range low. I, at that point, would be looking to sell out of the money puts at 142 strikes or below, because I think that 61.8, look, you have a lot of reference support there. It is a 61.8 of a big range. It is a stock Warren Buffett owns. I think it would find support there. You can see that this was like a $20 move down. This has already been roughly about that, so this really does need to hold. I'm iffy below the 200 MA, though, and I do think, unfortunately, the path of least resistance here would be lower. If it somehow miraculously rallies up to the downtrend line, fills the gap, and gets a backside of the old uptrend line, I'd be looking to short the bejesus out of this thing. But I would be interested in buying this down in the 140s via short out of the money puts. Google, I really don't have an edge on this chart pattern here, and when I don't, I just say I don't. I don't have an opinion on any stock. Some stocks, this has just been really choppy, and I think it's going to resolve on earnings. I think this quarter tends to be good, and then the next one tends to not be so good, if memory serves me correctly. Tesla. Excuse me. Tesla shorts live in their own personal hell, right? I've never met a group of people who just kind of don't get it so much. Elon Musk is Iron Man, for Christ's sake. The stock has gone through protracted periods of decline, but always seems to make new highs. I'll say this. I was bullish on this for a while. I'm looking to sell some pops close to 325. They have earnings coming up. I'll say this. Musk did the capital raise. The stock went higher. He announced that they have the Model 3 coming out soon, and they're getting into trucking. He does a lot to make the stock go higher. I am a buyer of dips anywhere on any pullback as long as it holds above 265. So like if we get a 50 MA touch and we get a trend touch, I'll be looking to sell out of the money puts at the 200 MA strike or below, whatever that is at the time, because the 200 MA was the resistance to get through. It should now be unequivocally the support, and my guess is that this will mosey on up to like 240 at that point. And I think that, if we lose the 265s on any pullback, I'll say the top is in for a while. If it holds the 265s, then I will not concede to the point that the top is in. It's run a lot. I'm cool with booking profits. I am not really interested in any short as long as it holds this consolidation range up here, basically the 20 MA. If you start losing the 20 MA, I'm cool with a right or right out try for a 50 MA test. but I need to see it first, if that makes sense. Nvidia, not acting like as bearish of a stock as I really actually thought it might be. Truth be told, I have a small long on in this position via short out of the money puts. I don't even want to discuss it because it's not really a trade that I would... it's something that will require management if it goes badly, so I don't really want to step in that in the moment. But I did say that I thought this area would be a buy, and that sort of was my thesis for it. We didn't even quite fully get down there. We got a test of the reference low. We didn't quite get a trend line touch, and it's now kind of meandering up. As long as this holds 99s, I'm going to keep that play on. If we lose 99s, I will just stop out. My target is basically to the downtrend in the 50 MA. You have a 50 and 100 MA confluence here. I unfortunately don't think, and I've mentioned this before, that I thought that this was starting to look like Amberella, and we all know how Amberella resolved. It resolved a hell of a lot lower. I don't think we're going to get any resolution on this in terms of range until the earnings. It's either going to be a gap up and we're going to retest the old highs, and if it gets through these highs, I'm just warning you, this stock is going to go, and it's going to go in a way that I don't think many people understand. If you get back below the 95s, I think that this will retrace at least to the channel low here near the 200 MAs in like the mid 80s. I don't know if it will fully fill the gap, but it could. It could risk a gap fill. And the 61.8 is pretty much in those 60s range. That would be basically the stock getting cut in half. And I would say that the down move at that point is probably around its course, and you could probably sell some out of the money puts. But if you're still long from 95s, you will not be a happy camper. So I need to now see, since we took this off here, you really need to see the trend break or break lower. And it's a go with. If you break the downtrend, it's going back up to the old all-time highs. If you lose this trend line and you lose these two lows, I think it's done. I think the stock is peaked and it's going a lot lower eventually. So that's my take on Nvidia. Chipotle, holy cow! I mentioned that this was looking like it was forming a bottom, a nice rounded bull bottom. The breakout was roughly in the 440s. This has run a hell of a lot in head of the print. I don't think I would be first chasing Chipotle now up from, if you took it like from this low, 394, all the way up to 483. But I would be a buyer on a pullback. You have a 50 MA in the 429s, and you have a 100 and 200 MA in the lower 400s. If there's a gap down, I'll be a put seller. I think Chipotle is, it's turned the corner. I think the lows are in. I remembered, let's talk financials. I talked about selling puts on this day. Now, I got a little bit of jazz from people I always say on earnings, if a stock can't go higher on earnings, it's going lower. But why did I do it on this day? Because this wasn't the beginning of a move. This wasn't this gap down. This was the beginning of the decline. This was a move already down from almost $60, already down to the breakout here in the 51s and the 50% fib and the range low of the consolidation. When a triangle snaps, it fills to the triangle where the triangle starts. We got there. It closed ugly, but I had faith, and it rewarded me with a gap fill and a downtrend touch. Now, let's get serious for a moment. This was a bit of a look above and fail. I want to see how this trades on Monday. The 20 MA, look, this is where it broke down from. This should now theoretically be the resistance. If it gets through the 20 MA, I think we're going to see 100 MA. Look where this took off from, above the 100 MA. 200 MA actually also here. Look at this. This was where it closed and gapped. This, and look, where it supported the 200 MA. That was why I put the trade on. So if we get above the 20, I think we're going to get a 100 and maybe a 50 MA touch, because look, this was kind of support where it broke down. So 20 MA is going to be very key for me on Monday and Tuesday, considering the market's supposed to be up. If it gets back below, like into this range here of like 52.75, I'm not going to be thrilled, and I might just book it. I am, however, I was kind of actually hoping this did go lower. Like, this was going to be the start of my trade, and then I was looking to get full size, like into the 61.8 and the gap fill, and we never got it. So at least I have something on in there, but I'm not up to full position. I would be looking to take profits up into those higher moving averages. JP Morgan. By the way, I think JPM and MS are now the new GS, if that makes sense. This is looking a little head and shoulders-ish. We got my move. Remember, I was looking for 93.32. It overshot it a little bit. And we are now pulling back. The trend and this range low were kind of my targets. And I said I thought the max down move was like to 77s. Basically, this move, was it that move? 83 and $10. Whatever. I was looking for a move down to the 200 MA, basically. I'm a little cautious on this as long as we're below the 100 MA. I'll keep it simple. And the 50 for that matter. So I think the upside rally would be to the 50 MA, where I'd be looking to maybe try a quick rider out short. If the 50 MA rejects it, I'd be looking for a move back down. If it gets through the 50 MA, just step aside. I do think that this has $100 written all over it at some point, but I don't know that we're not going to get a gap fill or a move down to this range low first. So that's my thoughts on the JP Morgan. The aforementioned Goldman Sachs getting into some of my price targets. The gap fill for one, and the backside of the old downtrend. This area should hold it. If it will or it won't is another story, but this area is key, and so far it's been bouncing a bit. This is a bit of a poopy pants looking pattern. I was looking for it potentially to get to the trend low, like a 200 MA overshoot, maybe to the trend low. We spent a lot of time. Look at this, by the way. Remember when I talk about backside of the old consolidation channel being a buy the first time? Look what happened here. It actually made a new all-time high. But the second time it didn't hold, and that usually gets you mid-channel. Look where we are here, mid-channel. Always remember that. It's a great way to trade. I'm hoping for selfish purposes Goldman Sachs does get down to the channel low. At that point, I would be selling out of the money puts below the 61.8 strike. If this doesn't and we get back up above, I'd probably be looking to short a maybe a 50 MA touch. I'll revisit that when we get there, just as an FYI. Because if we did get the 50 MA and it's in short order, it would be above this shoulder, and then I think it would invalidate the head and shoulders thesis. So I'll keep that in mind. I'll give you an update when we get there. So I'm either looking to buy GS lower, or for now short it up on a retest of the channel high. That's sort of my thinking. I think a lot of people will get excited up by the channel high, and they'll be buying at the exact wrong time. Caterpillar. A lot of consolidation in a range here, and you have a 200 MA. I was hoping for a move down to the range low. It doesn't look like we're going to get it. We do have earnings coming up, so that will probably be the resolution. If it loses 89.36 on the earnings, for example, I think it fills the gap to 84s and maybe even sees like 79.80. Ideal scenario would be this was a move back to the 50% fib, where I'd be looking to sell out of the money puts, basically doubling up the range for a move lower. If we do somehow break this down channel here, I think the stock will be north of 100 in no time at all. Like if it gets back up above 97.89, I don't think these old highs in 99s will hold it. I think you could basically project this move and 2 times the range up, so you'd be probably up to 109 pretty quickly. So I'm either looking for the move down to 79 to buy, 78, 79 to buy, or a move above these highs for a move up to 109. Boeing also showing a little bit of grit, a little bit of moxie, broke the downtrend, coming up to the backside of the old I have this divide in. This is when I was playing an options play. But look, you have the trend line here for a backside of that area. So this 181 area is going to be key. And the 50 MA held like a champion. Boeing, I don't want to really be short until it breaks the 50. If it breaks the 50, I think it sees the hundo. But as long as it holds the 50, it could see all-time highs. That's my story. I'm sticking to it. If you liked my review, hit the thumbs up. Please leave me some comments. And the best way to say thank you is a favorite and a retweet on Twitter. So please make that happen. Have a great week. I will be coming back at you with a YouTube live broadcast either Wednesday or Thursday. Cheers.